Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing language of big business to tell you what is really going on behind the scenes. Today we're diving into a filing from M.I.R., Pharmaceuticals Incorporated, and they've been busy selling a lot of stock. Before we jump into the nitty-gritty, if you find value in these deep dives, make sure you subscribe. We put out new videos every week, and join our growing community over on Discord. The link is in the description below. So M.I.R. Pharmaceuticals Incorporated is a company that has been involved in the pharmaceutical industry, and today we're looking at an update they filed, which is essentially them telling the public about some significant recent events. Alright, let's get straight to the main event here. On the 16th of October of this year, MIRA Pharmaceuticals sold over 1.7 million shares of their company, S stock. Now, what is really interesting is how they sold it. They did this through something called an at-the-market equity offering facility. Think of it like them having a pre-approved way to sell their shares directly to investors whenever they think the price is right, and the price they got was pretty good. They sold each share for an average of $2.19, which they say was a 66% premium to the price the day before. A premium means they got more money per S share than it was worth at the previous day. That is a significant jump and suggests they caught the market at a very favorable moment. So they sold all those shares and raked in about $3.8 million. That sounds like a lot of money, right? But remember, this is before they pay any fees or expenses associated with making this sale happen. So the actual amount they LL keep will be a bit less than all that. Still, bringing in millions of dollars like this can give a company a big cash boost for its operations, research, or any other projects it has in the pipeline. To make these sales happen, they used a couple of services. Rodman Twendrum Renshaw acted as the facilitator, and they used a platform called StockBlock. This tells us they are working with professional financial intermediaries to manage these types of stock sales. It is basically them calling in the experts to get the best execution for their trades. Then we have a look at the type of stock they are selling. It is called common stock, and it has a par value of $0.0001 per S share. Now, par value is a very small, almost symbolic amount written on the stock certificate. It doesn't reflect the actual market price or value of the stock you see earlier. They were selling it for over $2 a share. The important thing to note here is that they are selling actual ownership stakes in their company. And if you've ever heard of M.I.R., it is because their stock trades on the Nasdaq Capital Market under the ticker symbol MIR. So this is a publicly traded company, and these filings are how they keep investors informed about what is happening. Something else notable is that M.I.R. Pharmaceuticals identifies itself as an emerging growth company. This is a designation given to newer public companies that allows them to take advantage of certain flexibilities in reporting requirements for a limited time. It means they might not have to follow all the same strict rules as older, more established companies, at least for a while. And they have specifically checked a box indicating they are not going to use the extended transition period for new accounting standards. This suggests they are either confident in their ability to meet newer standards sooner rather than later, or they want to project an image of preparedness and compliance. And the report is signed by Erez Aminov, who is the Chief Executive Officer of M.I.R. Pharmaceuticals Incorporated. As CEO, he is ultimately responsible for the company's direction and actions. Now let's talk about what this all means, M.I.R. Pharmaceuticals has successfully raised a significant amount of capital by selling more of their stock at a very favorable price. On the surface, this looks like a win. It means they've got more cash in the bank, which can be used for many things like funding new drug research, expanding their operations, or paying down debt. Selling at a premium to the previous day's close is a strong signal that investor demand was high for their stock at that price. It suggests a healthy level of interest and confidence from institutional investors. However, there are always two sides to the coin. When a company announces they are selling more shares, it can also be interpreted as them needing cash. While they got a good price this time, this type of offering can dilute the ownership stake of existing shareholders. That means if you owned a certain percentage of the company before this sale, your percentage ownership will now be smaller because there are more shares outstanding. The big question is, what are they going to do with this newly acquired capital? If they invest it wisely into promising research or strategic growth initiatives, this move could be very beneficial in the long run. But if the funds are used for less productive purposes or simply to cover ongoing operational costs without a clear path to future profitability, then dilution might not be worth the immediate cash infusion. It is also important to remember their status as an emerging growth company. This flexibility in reporting is temporary. As they grow and mature, they will eventually have to comply with the same rigorous standards as larger companies. Their decision not to use the extended transition period for accounting standards could be a strategic one, aiming to build a reputation for robust financial reporting from an earlier stage. Looking ahead, the success of this stock sale depends entirely on how M.I.R.A Pharmaceuticals deploys these funds. Are they going to be able to turn this cash into substantial growth or new successful products? That is the real story we'll be watching. For now, it is a positive step in terms of capital raising, but the long-term impact will be dictated by the future execution and strategic decisions. Are Pharmaceuticals Incorporated's latest filing? What is your take on this stock sale and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.